Hey guys, in this video we are going to go over why it's so important to look left in the market. So a lot of people don't like backtesting and a lot of people don't recommend it, and I think that's so silly because of the fact that I literally went from 0 to 100 because I went and backtested and figured out the system myself. So it's so important to backtest because you'll literally know everything about what you want to trade. So if you want to trade gold, if you want to trade crypto, if you want to trade currencies, future, you use the same system, and essentially you're just figuring out certain ways to be more profitable. So you need to figure out the times, the exact time, so like 5 a.m. or 9 a.m. that your pair moves, the exact time session, how it moves between each time session, which prices it reacts off of majority of the time. There's so many things that you need to have to figure out your pair, and the more experience you have, the more that it'll make sense. So that's why I say I recommend doing 1 to 3 pairs max. And then that way you're not jumping all over from 20 pairs trying to, catch setups when you're really not understanding what's going on. So I'm going to show you how important it is looking left and how it repeats, how it's a repetitive cycle and it repeats to the right. So what we're going to do and how to efficiently efficiently backtest is you minimize this. So you go on the right hand side and you minimize this. So when people are like, oh yeah, backtesting is cheating or whatever the case is, no, it's not. You have no idea what's going to happen. So when you properly backtest like this and you go back in time, I mean, you can go as far as you want. This is 2020. I'm not going to go that far. But you can go as far as you want. So let's just say in June 2023. Okay. So you can, if you're wanting to go down on lower time frames and practice your entries and stuff like that, obviously you can go a couple weeks before or a couple months, but don't go too far back if you're looking to jump down, just because sometimes if you go way too far back, you can't jump down to the 1 minute or the 30 seconds. So I'm just going to draw up what I have here, and I'm going to show you how important it is in the present time. So this is in the past. So what I'm going to do is I'm going on the 4 hour and I'm drawing where price has majorly reacted. Now, when you're live trading gold, on the present time, you can start with the zones on the 1 hour. So you can draw the major reactions on the 1 hour and draw the minor on the 30-minute, because gold does move faster and there's more prices. So it's totally up to you, and I will make a video on that as well. So I'm going to attach where price has reacted. To the 2 hour or the 1 hour, obviously we're going to see zones in between. So if you guys want, you can mark those with a different color. And then what you do is attach the prices. To play it forward, and I'm going to show you that price action will react to this over here, and basically you'll see how well it reacts. So whatever happens on the left repeats to the right. Okay, so everything that we did over here, obviously it went a little bit lower, and because of the prices over here. But point being is the zones that we drew up here, and when price ended up coming up, each structure, each price tested in. So what does this mean? Okay, this means that you can take the left and position yourself to enter a trade. So for example, let's say here price ends up breaking structure. So the 930 and the 931 break structure here, and it ends up coming down. So instead of looking at candlestick strength or candlestick patterns or anything like that, that stuff is all old information. It's outdated. It's not effective. You want to really not be distracted by gibberish, if that makes sense. So you want to really figure out, okay, where am I entering? So we are entering based off price. So we have a 933 and a 931. Okay, so if this comes in and this ends up reacting and it closes above on a lower time frame, so let me show you what this lower time frame looks like. If we jump down to a 30-minute or even a 15-minute, and we're trying to get that price action. So based off the left, that was a buy. So this reacted once, this tried to react twice, and this is the third reaction. So always from the third reaction is when price reverses. So if we get the price action on a lower time frame, and we make sure that this 1931 doesn't break below, then basically we can get into a buy. So you can, I can't go that, actually maybe I can. Sometimes it doesn't let me go down too far. So to get more price action at that 1931 or 1933, we can just drop down lower. So don't be afraid of going on the 30 seconds or the 1 minute, because of the fact that we're not looking at candlesticks. We're not looking at, strength or dojis or any of that crap. We're paying attention to price and how structure is reacting to price. And that's one of the hardest things to learn. But once you get that experience, it makes more and more sense. So we're focused on entering on either 1931, even 1932 or 1933. So whatever price action we get on that, so we can see how it reacted already once, it tried to hit twice, and this is the third full reaction. So we want to set up for a buy between these two prices, okay? So once we get that buy, let's say we were ready at, let's say 1932. That's just what we were ready at on a lower time frame, 1932. And let's say we put our stop loss below. So that stop loss is going to go right below that wick, okay? So that is a small stop. If you want to increase it a little bit to like 15 pips, you can do that as well. So basically, once you get that entry and you're comfortable with entering on that specific price, you go back up to the 1 hour time frame. So again, I'm getting that buy from over here because I saw that it broke above structure. So it came down to retest here, and then it came down for a full retest. It couldn't break. Even on the 4 hour, I can see this more clearer. So this is a break of structure. It came down and tested that structure, and then it ended up reversing. So that's basically an easy buy opportunity just off those numbers. So then in regards to the target, now we had to figure out, okay, where's our next target? So our next major target would be here, 1955. Again, we're paying attention to the numbers, not candles. So 1955 and 1957, okay? That's our next major target. Now, in between here, we have some reaction. So near the 1947, okay? So this is in the middle of structure. It's considered minor structure, but it has to break. It's important. So you have to have multiple target areas. So this would be essentially your target one, making sure that it continues to break above those prices. And then if it does, then we can extend it to the major structure. Okay. You can have as many target zones as you feel necessary. Like even in between here, if you wanted to put in a price, you can put in that price to make sure that price breaks. Because visually, if you have these prices in, you can see that it's going to break. If you don't have these prices in, then you're just going to get scared if it reverses when a new session comes in, and you don't want that to happen. So let's just see how far this goes. Okay, so what ends up happening is we end up, so this is a new session coming in. So this is New York, and then Tokyo comes in. Okay, and then London comes in. So this was a retest of structure right here. So it comes in and it ends up pushing up. So if you wanted to add in to another position, you can add in on the minor structure. So again, you would go down to a lower time frame, whatever time frame you would want, and you would see how it's breaking above the structure. So it tested in, it retested here. So at this 1945, you could get another position. Now, adding in positions, you have to be so careful about the direction. So you want to make sure you're in the right direction, and you want to make sure you're getting, a precise entry, an accurate entry. Adding in will come in with time after you get experience with entries and stuff like that, but you're essentially entering on minor zones, on the break and test zones, and focusing on the left of what the number would be. So 1945 in this scenario. So obviously it comes to the major structure. It ends up reacting to both prices, okay? So this is just that first entry, and again, you can add a second entry in, but this would already be a 1 to 15. So this was November 13th to November 14th. A 1 to 15 in a day. That's really good, right? So it continues up, and it continues even further. So our next target would be here. Now again, we have some minor structure in between here, which you can outline and put the prices in. So just in case this didn't break, you would have it here, okay? And then you would tell yourself, okay, what prices does it need to break? 1963 and 1963.75 or 64, all right? So obviously it continued up to the 1969-1971 area, all right? So it reacted to the T, so it came down. Now, since we had such a big push to the upside, it may come back down to retest structure. So if we can't stay above the 1962 and 63, it's going to come back down for a retest. Okay, so let's just see. Okay, so it tried to break below and then ended up coming back up, all right? So it couldn't successfully break below the 1962 and 63, so it came back up, all right? So again, you can extend your target if you want. Now, So the 1971 and the 1969 have to break above, and then we can kind of look left. So again, you can add in prices in the middle if you want to just make sure they break. So let's just see how far this goes. Okay, so it tests into that minor structure in between here, and I just got it from this and this, okay? So it actually tested, and as you go down, you can see, so this was one reaction, this is two. As you go down further, you can see more in this. So now it's finally retracing because we had a huge surge in price. So back to that imbalance video that I did, this created a surge in price, so this has to fill, okay? So this first section filled because it couldn't continue higher. So even if you didn't have this minor, like I just put this in quick because I saw this, even if you didn't have that in and you saw it reverse, the point is that if it closes below that major structure, so that 1971, it's going to reverse. So it ended up closing below, we couldn't break above, and then we got a correction because New York's coming in at this point. So now this section of the imbalance filled. Now for this next section to fill, that 1955 has to break below, okay? So it tests in once, it tests in twice, and then ends up going up. So on that second reaction, you can enter a buy if you wanted to have your stop loss below structure. And then this is our major target. Now, when price is going like 10 to 20 pips in profit, you can put a stop loss like in the middle if you want to. So you could put your stop loss here, you could put your stop loss here, whatever you prefer. You don't have to have it at break even or below once it's headed up. You need to put it in profit, and I recommend in the middle or at least somewhere where you get some profit just in case it spikes back down, especially if it's during a session change. All right, so this, we would put our stop loss in the middle, and then this is our next target. So it actually retests this mini imbalance right here, tests in this 62 and 63, and then goes back up. So, and then you can extend. So this is why I swing, because the longer that you hold, especially when you have these opportunities, it makes more sense than scalping and, risking more and having to do more positions when you can just hold. It takes time and experience. I'm not going to lie. It's not easy, but it's worth it. And once you get that experience with the pair, it makes more and more sense. So all you're doing is looking left and paying attention to those numbers. So, and as you can see, all the prices that I did to the left-hand side, they're all reacting. And so that's why it's so important that you look left, because whatever happens to the left repeats to the right, and that's how you're creating your setups and stuff like that. So I hope this made sense. Practice this, and if you guys have any questions, feel free to message me on Instagram or comment below.